Is Stephen?
Stephen is not. Stephen is in South Carolina.
Oh, darn. He's always, do we have everybody here, or?
We do. Josette could not make it either, so we have the foursome, the four musketeers. All right, we're going to get started. Our first conference panel. You know, we always like to talk about what scares and excites us. Today we're at war. We have AI. We have, well, we'll talk about AI later, but it's everywhere. I just saw a quote from Putin in 2017, whoever, it was on our 8 o'clock briefing, whoever wins the AI battle rules the world. But we have people who've been to Ukraine 4 or 5 times recently, Mitzi, who last I saw you, you were on our Midwest tour. She went everywhere. Chicago.
Yeah.
Is that a hug? Do we get to hug?
Oh, yeah.
Sure.
Oh, boy. Yeah, a girl can dream.
We went to Detroit, Ann Arbor, Cincinnati, Columbus, Cleveland, and you were a trooper. And you've been, you'll tell us how you see the world today. Tim was talking about Eurasia, ex-Russia. We crossed paths over there. Roberta, we also crossed paths in Eastern Europe and has had lots of roles since. And then Barbara, you're on CNBC a lot, but I think of you as a Michigan person. Go Blue.
We're number 3. We're number 3 right now.
Did you have a bet where she made you say that?
No, I mean, that was a terrible game.
behind Texas.
That was a terrible game, but we'll move on. But you serve on the investment committee at your alma mater, and also two sport All-American.
U.S. team.
U.S. team. I gotta get you your microphones. They're around here somewhere. But we're gonna just kick it off as quick introductions.
Right here.
There you go. And what scares and excites you globally? Not asset class, not industry, but geopolitically. I asked Tim Draper earlier today, I give you $1 billion, where do you invest? He was talking a lot about India, but kick us off.
Okay. Thanks. I'm Barb Duran. As was said, I'm on the Penn State Investment Council, and I wear 2 hats. I have my own firm, wealth advisory and asset management. But stocks, publicly traded equities are really where my focus is, and bonds sometimes, but basically stocks. So India is an interesting one because I think with the shift away from China and investor perception, given how the government has behaved in the last few years, and this ongoing rivalry geopolitically, there's much more interest in India, which is a democracy and has done a lot of change in their system. Still needs more to be done, but I think people are really exploring investment opportunities there. And of course, the market has been strong. When you look at globally, though, there are all these hotspots. Typically, short of a world war, geopolitical events do affect the market in the short term, but almost always it's a buying opportunity. Even when we invaded Iraq several times, or even when the Ukraine war with Russia broke out, the market swooned, but it's usually a buying opportunity. If you look at World War II in 1939 to 1944, the market was up 50%. So I'm not as concerned with that. With those kind of events and the shocks that happen, as I mentioned, they're usually buying opportunities. So we're focusing more on the U.S. The U.S., as you know, has been the second year. We could actually be up more this year than we were last year. And it's been an extraordinary year with the S&P, NASDAQ up in the 20s, excuse me, in the mid-20s. And I think there are still going to be opportunities because when you look at the macro environment, I mean, this has been an economy that has defied all traditional economic models, and I think a big part of that is we never lived through a big shutdown economically. And so coming out of it, if you remember, the Fed was talking about transitory inflation, turned out not to be so transitory in terms of measuring it in months, but ultimately it's been a few years, and it has come down dramatically. Depending which measure you use, it's come down from 9% to under 3%, and the Fed's preferred measure, which is the PCE, and the core PCE is down to like 2.3% and 2.8%, respectively. So inflation has come down tremendously. we are kind of stuck, idling in inflation right now the last 3, 4, 5 months, and there could be a little bit of pickup because the economy is being much stronger than anticipated. And consumers are still spending. There's been a great wealth effect since 2019 with bull market and housing prices up. So people are worth a lot more money. And if you look at even housing, which of course, as you all know, has been very troubled, it's been probably 70% of home ownership is either no mortgage or mortgages under 4%. And that's why there's been very little supply coming to the market, because you're not gonna go out and up your cash monthly payments. But that, as a result though, with that much, that much in housing that is actually quite affordable for the owners, you've got a lot of discretionary spend. So the consumer is still spending. And you've certainly seen over the last year a lot of weakness in the lower income, and that looks like it will continue. But for now, looks like with the Fed being very supportive, probabilities are going up that the next couple of weeks when they meet again, they will cut rates another 25 bips, but not as much as next year. So I'm very constructive on the market next year. It's hard to see another year as strong as this year and last year, but this year nobody predicted this either. It would be a good year. So
Mark, we're going to keep it going.
we're going to keep going. Okay, but basically valuations are an issue, so it's stock picking and sector picking. Anyway, thank you.
Roberta, why don't you just...
You can talk about the markets, you can sort of see how you can be more global.
More global. Do we have to be more global?
Maybe that's your answer.
I'm Roberta Brzezinski, and I've been coming to these events off and on for a number of years. I've known Mark for many years. Spent 25 years as an emerging markets private equity investor. I guess my personal journey is being a lot less global today. And why is that? That's because over a 20-year period, a super strong U.S. dollar has made it very difficult to make money investing in other parts of the world. It is what it is, no matter how good of a stock picker you are, no matter how good of a private equity investor you are. If you're fighting a losing currency battle, you're screwed. And I would actually give an Indian example of that. So one point about 7 years ago, when I was at the second largest Canadian pension fund, we invested in a mezz fund, an Indian mezz fund run by a good local manager who had at the time they were on fund 2, they had exited from 13 out of 14 positions they had. They had like belt and suspenders mezz with all the governance, with great interest rates, etc. In rupees, they had an IRR of 24%, and USD, they had an IRR of 2%. And we said, let's do it anyways. What do we care? We're a Canadian pension fund. We're in it for the long haul. Well, guess what? That was the wrong move. It continued to be more like 2% because the rupee goes down like 10% every year. So, not to knock India in particular, although it's easy to do. I can tell you some more stories about that. But in any case, yeah, when you look at currency, if you are a USD investor, it's really hard to argue that you should be investing anywhere else the next couple of years. The more crazy stuff comes out of this country, and I think it is crazy what's going on right now, that's a personal opinion, not a corporate opinion, the more it actually makes the dollar strong, right? So like no matter what we do, we are the reserve currency, we're getting stronger and stronger. So what scares me? Politics. What excites me? The markets.
Thank you. We have very similar fears, very similar fears. So I'm Tim McCarthy, Halcyon Portfolio Management. I invest in Eurasia, ex-Russia. And yes, I have fear of dollar strength, and I have fear of war. Ukraine is kind of at the center of Eurasia right now, geopolitically and physically. Yes, we are investing there. But currency risk is really hard to manage in a region with 25 countries. We're invested in about 15 countries, so it's a bit more manageable, a bit more liquid. But the currency movements are great. Think about what happened in Turkey in the last few years, where Erdogan fired 5 central bankers over a 2-year period, 3-year period. And then finally, he succumbed to orthodox monetary policy, installed new people who raised rates from 8 to 50% to defend the currency and to fight inflation. But inflation had momentum and kept rising to 75% before it finally plateaued and showed signs of coming down. So once the inflation genie is out of the bottle, it's hard to get it back in. The US is completely different. Like the reserve currency status is a completely different dynamic. And it's really interesting, but a strong dollar is bad for emerging markets in general. It makes it much more difficult. And if these Trump tariff policies are implemented, it is definitely inflationary. And it does mean more dollar strength, relative real rates, the trade account and so on. There's so many factors supporting the dollar strength. And so I am afraid of further dollar strength. At 106 on the DXY right now, which is up from 101, I think, over the last few months. This is hurting us. This is difficult to manage this. In terms of my other fear, war, I believe the world has bifurcated into democracies versus autocracies. I do believe that Trump's tariffs could morph into other types of sanctions, just like we have sanctions on Russia because of the invasion of Ukraine. We could easily see sanctions on China. Not easily. It would be more difficult to pass because there's so many more economic blowback impacts. But China has already started to take away land from Bhutan. It's an unknown small country with very little geopolitical influence, but they're taking land from Bhutan, they're taking land from India. They could make signals of hints of invading Taiwan. They're supposed to be ready by 2027 to invade Taiwan. If that's the case, we're going to see sanctions on China. This is our largest trading partner, and many people in this room probably have exposure to China. So, I wish I had been out of Russia before they invaded Ukraine. I didn't believe, like most people, that they would invade Ukraine. But we're going to be at that same decision point, I think, soon.
So speaking of Ukraine,
yeah.
and that segues over to you.
Yes, sorry, going on and on.
Okay, and I'll go on and on too. No, I won't. I'm Mitzi Perdue, and I want to talk about investing of a philanthropic type. I've been to Ukraine 4 times, and officially my title is I'm a war correspondent. I've had more than 250 stories about Ukraine published. Many of them were the result of interviews conducted in bomb shelters in cities under active attack. But what I took from it is, I'm going to tell a 60-second story and then where it led. One of the people that I interviewed, when I'm in Ukraine, I'm always a guest of the Ukrainian police, and they're the ones who investigate war crimes. And when I'm in a town, and let's take Bucha for example, they learned that an American war correspondent is there, and people come to the police station to tell their story. Well, a 14-year-old girl, her name's Daria, came into the interview room. I spent half an hour with her, and I'm taking notes as fast as I can. And her story, which she told in a voice that I'm going to imitate. My parents were machine gunned down in front of me. I watched them bleed to death. Well, her whole story was told in a monotone, and a good bit of the time she was talking about it as if it happened to somebody else. And a psychologist would say, that's disassociation. Somebody with disassociation, it's really good for them to get counseling, because without it, they are very, very likely, the predicted outcome without counseling is that they will self-medicate with alcohol or drugs. So after Daria has left, and I'm feeling fond of her because we've talked for half an hour and she left, and I asked the police translator, is she going to get counseling? And the police translator, I see some people knowingly are shaking their heads, not a chance, not a chance, because it's a country in the middle of war. Psychiatry has a pretty bad reputation in Ukraine anyway. People go way out of their way to avoid it. And there are reasons for that. The Russians pretty much destroyed the image of psychiatry by using it as a weapon. So I'm thinking, this girl, she's on her own. The translator told me she's on her own. So I began doing just a little bit of research, and according to the WHO, there are 15 million people in Ukraine right now who have mental health issues that keep them from being able to work or to have a close relationship. Panic attacks, insomnia, on and on. Well, what could be done? And now, I wrote my master's thesis decades ago on computers, and I have an endless interest in uses for computers, particularly artificial intelligence, particularly large language models and ChatGPT kinds of solutions. What if there could be an artificial intelligence ChatGPT kind of effort where the information would be tuned? It's called RAG. It would be tuned according to information that the Psychological Association of Ukraine says is valuable and culturally sensitive. That could help bridge the gap between the need and the very few numbers of psychiatrists or mental health professionals. I mentioned this to General Petraeus. He liked the idea. This is a man who's had 2.5 million people under him, and he's so aware of PTSD and mental health issues. He raised $250,000 for the American University of Kyiv to pilot this. A $40,000 server has been donated, and there are 2 mental health professionals who are working on tuning the bot, and a couple of, am I going over my time?
Well,
I will end.
Well, no, it's not that. I think this fits the philanthropy impact.
Okay, I will shut up, but I think
No,
it's
no.
the best investment in the world, because for the least amount of money, you can have the biggest impact.
Yes.
No, fair enough. And it's not just obviously Ukraine. It's and we're talking about Blueprint for Kids, and it's a wide issue. Sure.
Well, the reason General Petraeus liked it is it could be scaled to fit any country that has a university. So it's an investment, but of a philanthropic kind.
So we'll hit back there. Well, I sort of let each of you, because you have so much to say, go a little longer than I usually do. So I'm not even going to ask a question. I'm going to allow. You've heard these perspectives. U.S. markets are good, except dollars causing some issues for some people.
It's outside the U.S. though. Not
Yeah.
inside.
She likes
Well,
the US.
emerging markets are going to get tough. They're going to be tougher in some ways. But any thoughts on? We talked about India earlier today. Tim Draper says that, what was it? Actually, Stephen Burke, Uncle Stephen.
Yep.
How are you?
Good, thank you.
I was thinking about your session today. You were talking about was it Druckenmiller and who was the other? They had opposite views on China. But how do you see the world today? I forgot you're here on Zoom. You're right here.
I think that you look at it, China's should be the largest contributor to growth, but its 10-year yield is now sinking down to below 2% today. Their PMIs have improved a bit the last two reports places, but even its growth is slowing. Europe, half of Europe is still seeing inflation rising, and they have low growth going through. And then you look at Korea, and they're feeling the pinch of the trade issues and then the mess that's over there too. If somebody can weigh in, I'd love to figure out what's going on in Korea right now. And then the U.S. is plugging along, as everyone says, but we are exceptional in some ways from a market perspective and an economic perspective and an innovation perspective, but our murder rate is 6 times out of the UK and 30 times out of Japan. The life expectancy is lower than most high-income nations, even though we spend twice as much. We have debt deficit problems as well, but the GDP now is up to 3.2% from the Atlanta Fed. So to me, the options start to get very limited when you look at where you can invest. I think the concerns that Tim raised and that were raised earlier on the panel about governments that you can't count on is a big issue, and I think we're going to see more governments topple in the next couple months, and that's going to create even more uncertainty. So in that environment, I tend to go for the safer bets. So that'd be my take on it.
Fair enough. By the way, you look like the internet in 1993. I think your internet in South Carolina.
I'm in a bad hotel room.
Okay. Well, questions and comments about these themes? Andrew.
I guess Barbara and Stephen.
Correct.
$7 trillion in U.S. debt comes due, has to be refinanced next year.
You sound like you have a cold.
We're in December. $7 trillion in U.S. debt comes due. has to be refinanced next year. What's gonna happen, or is it just gonna go? No, it's just not gonna go, it's just gonna get refinanced? Is
Well,
anything gonna happen?
Yeah, I'd love to hear Steve's view. We often have similar views, but a lot of things are going to depend on the tax packages. And what happens as the president-elect comes in and what will happen there and what they're going to cut. So we don't know. There's big promises in terms of cutting costs of government and also raising revenues. I'm a little skeptical on both. But really, we've had this deficit. We are refinancing every month, more than every month. And so we've been managing it, and that's why probably long end rates are up a little bit higher than one would expect, because they've crept up since the Fed, has been cutting. So I think we'll continue to refinance. It sounds bad, but we have the wherewithal and we're doing it. So, Steve, I'd love to hear what you have to say as well.
I think, as big a fan as I am of Janet Yellen, I think she made a mistake on terming out the debt when we had 0 interest rates. And we should have been extending, not having so much so short. So I think that created the problem that you just mentioned, Andy, but I think that the U.S. will manage it. One of the things that we haven't really talked about much today is the deregulation and lowering the cost on businesses and what that can do to growth and also increase tax revenues. So I think there's other forces at play that aren't getting as much attention as some of the big headline things, and I think the deregulation push is real. I also think there's probably a couple $100 billion that they can pull from the IRA. Whether that's a good decision or bad, we can leave that for a bigger debate. But there is money that they'll find, and inefficiencies in the government that you can come up with savings that can offset some of the issues that they have. But I don't think Trump will be able to lower taxes. I think he'll be able to extend them at best, and maybe throw some bones like no taxes on tips, things like that. But I think we're going to see higher rates for longer, and I think the market's a little too aggressive on where they think rates are going down to. You're already starting to see Fed President Williams was saying today he's not sure how much more we have to do given where the economy is. So I think there's going to be a lot of debate on how low rates can go, and I don't think we're going to see the long end move much. Yeah.
Other comments or questions?
Just a quick one. We heard a lot about India and China and emerging markets, but does anybody have a view on Mexico in particular, particularly when it relates to China moving things into Mexico with the tariff wars coming, and South America too? I didn't really know anything about South America. Are there any safe havens that aren't emerging markets or India or China outside the U.S.?
I can take that one if you want. I cover, in my current role, I cover Latin America. I have about 20 people down there doing business intelligence. I also sit on the investment committee of a new private debt fund focusing on Latin America called Darby International Capital. It's Fund 4, so if that helps. So,
Good background.
Well, yeah, so obviously what's going on in Mexico, we've just, Control Risk has actually just raised, this isn't going to make you feel any better, the threat rate in Mexico from medium to high, and that was like a big thing that we did. We have a lot of people covering this. That isn't just because of the whatever debate with Trump as he comes in, but also the degree of kind of instability, crime, and corruption at the Mexican state level, at the different states levels, because of what's going on with the drug cartels and other things like that. So it's becoming more and more chaotic. Can I tell a really short story? I was recently with...
Very short.
Very short. I was with the number 2 of Mexico's second largest family office about 3 weeks ago in Mexico City, and he was complaining, these people are really tough, right? He was complaining that there's a certain lake that a lot of wealthy Mexicans have their weekend homes on near Mexico City, in addition to all their other homes. So now if you want to go and redo your kitchen in your home on the lake in Mexico City, out near Mexico City, you're one of these rich guys, and you go to a contractor, the contractor now has to pay the drug cartels. So you have like a 30% markup on your kitchen renovation, because you literally are paying the drug cartels, who are between the contractor and the local regulators who are giving out the permits to do your personal home construction. So that's what's going on in Mexico. Definitely not a safe haven. That being said, there's a lot of business to be done. Doesn't mean you should pull out, but you got to be aware of it. So What we're seeing in LATAM, we're seeing actually an increase in at least 3I denominated interest in Brazilian infrastructure, private equity, and particularly in the renewable space. We are seeing people getting fed up with the current Colombian government. It's very likely to return to center-right in a couple of years' time, so Colombia's looking okay. Uruguay is looking decent. Chile is kind of gradually getting increasingly unmanageable, but still fairly manageable. So another bright spot is actually El Salvador. The dollarization of the El Salvadorian economy a few years ago has resulted in El Salvadorian business entities and families being able to buy stuff up all over Latin America and getting back to the US dollar.
The president has a lot to do with that.
And Tim Draper was singing Argentina's praises.
Boo on Argentina. Oh, did I just say that? That's a personal view.
You had one more question, we'll just we're gonna switch to assets.
Very quick one. What's the reality of Trump pushing Ukraine to a settlement with Russia?
Oh, boy.
If we knew that, we would all be billionaires and we wouldn't be here right now. Speaking, and I want to just make a quick plug, speaking of Ukraine, non-sectoral. I'm on the board of a philanthropic organization called Children of Heroes, which provides mental health services and summer camp services and a bunch of other medical services to the children of Ukrainian military people who have been killed, both men and women. So, Children of Heroes, you want to give on Giving Tuesday? Give to us.
I thought it was interesting what you told us, Mitzi, and we've been hearing about it, is Ukrainians are tired of this war.
Yeah.
So it's there's a lot of forces, and I think the personnel issue is what's also, and in addition to the mental health.
I kind of
There's
disagree.
someone that,
Can I interrupt and disagree?
well, I'm passionate about this subject, as you know, but I'm saying the polls are the polls, and she was just there. Why don't you, let's hear it from Mitzi.
Okay, I've been there 4 times. The first 3 times, all I heard was about strength and courage and fortitude, and we're strong, we're Ukrainians. In September, there was a switch. There's a meme going around that I've heard from several sources, including people in the media. And it's, you can get territory back, but you can never get land back. We just want this over. And the big hope is, I actually have a bet with which I made yesterday, by the way, by Zoom, with the publisher of the Kyiv Post. And the bet was, are we going to be pleasantly surprised to the upside by what Trump comes up with? I mean, he's expecting that it will be something completely different from anything that we're thinking of.
There's one thing we probably don't, it's unpredictable. Well, you benefit more than anyone if there's peace.
I mean, the easy answer is he could end this war in 24 hours. Just give Putin what he wants, and and not provide the military weapons to let the war continue, or and convince the Europeans to not give the military weapons. That would be the easy solution, but it's not the right solution. It will lead to China taking Taiwan, many other larger cascading effects. It's democracy versus authoritarianism, which is something we've been fighting for centuries over. Just giving it all away, it just doesn't make sense. But
There is a scenario, there's a different scenario that people could play out, that he could use his, because the Ukrainians actually think that Biden giving them little didn't work. Europe even worse. That he actually, he's a Trump, he's like a little Joker card. What will he do? And we just don't know.
We were fighting Russia to the last Ukrainian. That's the strategy, I think, of the current Biden regime. That's why we were drip feeding the military weapons. It's a horrible thing to say that, but we were using Ukraine to fight this proxy battle.
Can we just return we go back about 60 years? You remember Vietnam? Most of us in this room are too young to remember Vietnam, but at the end of the day, this is a proxy war. Obviously, no one was going to go in and fight them foot to foot, so the Monday morning quarterback on this, I think, is ridiculous. Remember, the Russians invaded Ukraine, and I know lots of Ukrainians, and I can tell you that the thing that people were the most concerned about, remember, we're looking at no offense to people who spend a lot of time in Russia, I spent a lot of time in Russia, but we're looking at a murderous autocratic regime who will not just be like, oh great, we're getting this territory. They're gonna go in there, they're gonna ethnically cleanse, they're gonna rape, they're gonna take kids away from their families, they're gonna, emotionally and physically blackmail tens of millions of Ukrainians. Ukrainians know this. There is no going back. So it is not true what you're saying. Of course they're tired of it, but do they want to be annexed by Russia? There's going to be 40 million Ukrainians in Poland. Maybe not 40. I don't know. What do you think, Rich? 30 million. I mean,
By the way, I'm reporting on what some people said, not all people.
I understand, but this is the people in Ukraine. The reason why we're in this pickle is 10 years ago, investment bankers that I knew, went to the barricades in 2014, and they were like, we, cannot have Yanukovych turn us into Russians. We are going to not be. This is going to be a police state. We would rather die than have this happen. And that's why we are where we are. And that is what's going to happen until the regime changes Russia. So the Ukrainians don't have a choice.
Great
We gotta
question.
fight.
And Europe does not want this either.
No,
It's
Europe
right
doesn't
in
want it
Europe. No, Europe's a big one.
Well, you're on the next panel. Can you?
I'll wait.
I want to try to keep it slightly. We're 7 minutes behind already. But thanks for kicking off this first panel, and we'll be around to talk about in the breakouts. There will be a Europe and Ukraine breakout. There'll be, but then there are going to be some asset class breakouts, and no one better to represent venture than Brian Cohen. So we're going to transition. If you could, thank you, Stephen. Thank you, Roberta, to be continued, Barbara, and Mitzi, thank you. Tim.
Thank you.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.